Let's bring on board our guests for today. We have Hemant Kapadia joining in with us, as well as Siddharth Sedani as well. Good morning to both of you as well. And Siddharth, I'm actually going to come to you. We have seen a lot of these news flows coming in for some time, in terms of the OFS coming in, whether it's in defense space and railway space, right? Nikunj was talking as well. And obviously, just last evening, 5% OFS is what we were expecting in terms of IRCTC. How are you reading in terms of fundamentally what should one be looking out for from these companies, which we could be seeing government companies where we could be seeing, the holding and divestment of the stake coming in? How are you viewing this, and what would be one of your picks that you would give, or what are you looking at in terms of stocks over there?
Hi, Vinny. Thank you for having me on the show. This OFS has been coming as we got to know IRCTC, but I'm not that gung-ho about the stock, neither the OFS, because in the history of last 1.5 2 years, not major OFS has made money. In fact, in December 2020, IRCTC only came out with an OFS, and then after it made a good profits and returns for the investors. But rest other stocks like ONGC was 8% down after the OFS, Hindustan Copper, or for that matter, NMDC is very close to the OFS, has not made money for the investors, especially the PSU OFS. Of course, Suti stake sale of Axis made some money after the stake sale, but overall, for the fundamentals looking at IRCTC, I'm not that gung-ho as of now. So I would not like to participate. If in the same space, yes, I am positive about the railway space, something which government is looking for contracts to give for Vande Bharat, likes of Siemens, or for that matter, who is providing auto ancillary to Vande Bharat trains, likes of Gabriel India. So these kind of stocks we are more positive upon rather than being participating in the OFS of IRCTC.
Okay, so Siddharth doesn't share a view on a positive side to participate on the IRCTC. That's the take coming in. Welcome back, and you're watching Buy Now Sell Now on EP Now. And before we get started with all your stock related queries, it's very important to understand how should you be actually maintaining and protecting yourself from the volatility in the market, the upfall and downfall. And Siddharth, how would you actually advise a viewer in terms of the moves that we see sometimes coming in the market? What should one be doing to protect themselves? And if the market is subdued like we have seen coming in for such a long time, what should the viewer be doing to protect themselves?
Well, Vinny, it is quite simple that be away and stay away from the noise. It's just because of when you go too much negative or too much read into the volatility, you tend to get panic. You tend to sell your good quality companies in the market. So you stay away when there is a lot of volatility and news flows. The best thing in the market to curb this volatility is very simple, that you have to go and accumulate companies on a staggered manner just to curb out the volatility, and averaging benefit is also there. So always look out for a piecemeal kind of a buying rather than being lump sum buying at one go.
Okay, so that's the advice coming in for all our viewers, to stay away from the noise and try to write your winners. Well, let's move on and let's kickstart your queries section. And the first query that I have is from Deepak. He's from Santiago, a regular viewer of our show. Thank you so much, Deepak. But Siddharth, he wants to know view on Kennametal and Tube investments. Which of them will be a good buy for the next 2 to 3 years horizon? Or other than that, if you have any other name, do suggest, because both of these counters I see is up more than 40% on a YTD basis. But more steam left?
Well, Srishti, both the companies are good. Kennametal's had a good management commentary post results, so that stock is also good. Tube Investments is also a good, strong parentage company with a strong growth outlook by the management. Although both of the companies we don't cover, but when you talk about Kennametal and a multinational company, we have one multinational company which one should always start accumulating as of now is Linde India. Linde India is again a multinational company into the industrial gases segment. So we are more positive in terms of some of the multinational companies like Linde India.
Moving on to the next query we have from Sugumar.
He wants to know from you, Siddharth. He has bought 500 shares of Bajaj Consumers at a price of 162, sitting at a profit of around 15 rupees per share. But moving on, what's the outlook on this one? Will that be a hold or sell, or what should be the suggestion?
Well, it's a good stock, average stock in the FMCG arena. So you can always think of booking some profits off the table. In the FMCG arena, one has to look out the product profile, and larger the product profile is better the stock. And of course, Hindustan Unilever is one. Added to that, a unique FMCG play which I am looking at is Tata Consumer. So Tata Consumer can be switched over, and with an investment time horizon of maybe 12 months. So I would put my neck out and buy Tata Consumer and switch over from Bajaj Consumer.
Uh, Siddharth, this next query we have is coming in from Rajagopalan, and this one is on Supreme Petrochem. Wants to know a good level to buy this stock at for a long term period. Time holding period is around 2 to 3 years. They are okay to hold with it.
Well, I would advise that one can stay away from this stock at least for a quarter or two. Look out for some other PSUs like BPCL for a positional or a long term perspective. I think there can be a good momentum there. So instead of Supreme, I would advise to get into BPCL.
Okay, so that the next query we have is coming in on EIH, and Satya CK wants to know how is it looking to actually buy EIH on the long term.
Well, the entire hotel space slash this hospitality space has been doing good. But instead of EIH, I would be more comfortable with Indian hotels because the chain of hotels, luxury hotels, which they have, they have capex, they have expansion plans, and the average ARR, average room rates are also improving, occupancy improving. So I would subscribe to Indian hotels instead of EIH.
Okay, moving on to the next query that's coming in from Chitra, and Siddharth Chitra has a basket of stocks where she wants to pick a couple of them. She has got KPIT, GNFC, Imami, Yes Bank, and Signed as the options. Which one would you recommend for a buy?
Well, KPIT is one stock which I would like to buy at this situation. And along with Cyient is also a good option to look at. GNFC is one option which I would look to buy after looking at the results of December quarter. As we know, the previous quarter Q2 was a little tepid and weak quarter for GNFC, but it's a very good company. So three company I would like to pick out here is GNFC, Cyient, and KPIT Tech.
Okay, let's move on to the next query.
Coming in from Manoj, and he's from Doha, Qatar, and we hope that you're enjoying the FIFA World Cup. But coming to the stock queries, Siddharthi wants to know whether it's a good time to buy and enter into Vedanta for the next 2 years. He's looking to invest in 3,000 shares. What will be your advice?
Yes, it's a quality play. One can look out for this company for next 2 years. Overall perspective is improving. The businesses are improving. Dynamisms are improving in terms of scalability of the business. So definitely one can look at Vedanta with a 2 year perspective.
Okay. Siddharth, this next query is coming in for you, and this one is on Reliance Industries. A share has 756 Reliance shares at 1,371 rupees. They're holding it for 2.5 years. Should they continue to hold this now, or should they look at booking some profit or all of the profits?
Well, first of all, congratulations for picking up the stock at the lower levels. And since you've been putting in so much of a time to this stock, and it's the best of the conglomerate in the industry, biggest of telecom. So stay hold with the stock with another 2 3 year perspective. I think one can get fabulous returns from here on Reliance Industries. Value unlocking is also one thing which one should contemplate likes of Reliance Retail coming out, Geo coming out. So value unlocking is one thing one should look at. So hold on with this stock with the next 2 year perspective.
That's a hold for the next 2 to 3 years on Reliance Industries. But with this, it's time to slip into a short break.
Now let's keep it going with your stock related queries. And if you have already not sent us your queries, you can send us your queries on YouTube or our WhatsApp number or even on our Twitter page as well. And Siddharth, I'm going to come to you with the next query. And this one is coming in that we have is from Purnima, and this one is on Adani Wilmar. 100 shares of Adani Wilmar is what they are holding at 825 rupees per share. Obviously, they're making a loss on it as of now. Siddharth, what should they be doing? Continue to hold this, book a loss, average it out? What's your view on Adani Wilmar?
Well, we don't cover Adani Wilmar, but the overall perspective, since you're making losses, I think you should hold on and look out for a quarter or two. And then once you get an upswing in the stock, you can come out. But as of now, it's a hold.
Query coming in from Sri Krishnan, and Siddharth, let me take it up from you. He is holding Sumitomo Chemicals, Bharat at a price of 518. The stock has seen a one-way rally on the upside post-listing, but for now, will there be an advice to average out, hold, or sell?
Well, it's a very good stock. I think one should hold on in the space. Sumitomo Chemical is a good stock to hold. Added to that, in the chemical arena, there are a lot of companies to add up further because we believe that next 3 to 5 years, chemical industry can be a very big game changer from here on. Although we've seen a good returns in this, still for next 2 3 years, we believe good returns can be expected. Companies like Deepak Nitrite, Navin Fluorine are the top of the list for us in the chemical space, specialty chemical space.
With the next query coming in from Anoop, and Siddharth, he wants to enter any of the tire stocks, be it Apollo, CEAT or MRF, but the tire stocks have been on the roll since the start of this year. What's the outlook ahead and what will be your pick amongst the three?
Well, Apollo, CEAT, both the companies are good. One can pick up any of them from the tire space. Since you are very positive on the tire space that is ancillary to the OEMs, I think look out for battery space also. I think something like Exide also looks good. Results were very strong, and after a very big lull period, the stock has started moving.
Okay, the next query we have
From Hemant, and the viewer's name is Hemant. And Siddharth, let me take it up from you. He wants to know the fundamental view on HFCL and Sterlite. Which one is good for 5G for the next 3 to 5 years?
Well, frankly, Hemant, I'm not positive on any of them. I believe on the basis of 5G, I think you need to look out something which is a tech company which is more based on IT and software kind of thing. And amongst this, Tech Mahindra looks very interesting if I look out at 5G level. And broadly, if I want to go with a clear-cut telecom provider, then I would like to go with Bharti Airtel.
him in this next query we have is coming in on and this query is on HUL Siddharth. It's coming in from Vishal. He's bought HUL shares at 2,688 rupees. Should they go ahead and buy more, or what should they be doing with HUL as of now, or wait for more correction if they're looking to hold for a longer period of time and buy more?
Well, our targets on HUL is 2951, and I think one should hold on with HUL. We believe the kind of flows are coming in from the rural India, the kind of volumes are coming in. I think HUL has been doing good on most of the fronts, like beauty, personal care, home care segment. I think volumes are coming in, rising rural demand. Palm oil prices is also are lowered compared to the last quarter. So that's also an input price benefit for the company. So HUL is definitely a hold with a target of 2951.
Okay, moving on. The next query coming in from Madhusudha Rao from Hyderabad, and Siddharth, he was one of the allottees of Power Mech projects when the stock got listed, and has been holding this particular counter since then. But now, after almost four times of return in this stock, should he continue for some more time or shift to any other space, or particularly the cement sector? What will be your advice?
Well, at least some profits has to be booked. At least 50% profits has to be booked. And if you want to get into the cement space, there are a lot of opportunities in the cement space. As we know, Q3 and Q4 is the main quarters for cement to give good performances. So cement is definitely a buy. If you want to switch over your profits to some of the companies, Ultratech is one, Dalmia Bharat is the second one, and if you're looking for a small cap company, Sagar Cement looks very interesting.
Um,
On the next query coming in from Anjali and Siddharth. Anjali has been holding PNB Housing share at a price of 394, almost 400 rupees, and sitting at a good gains. What will be your view on that? And other than that, a next query coming in on ICICI Prudential. Will that be a good bet to enter at these levels?
Well, ICICI Prudential is a good bet to get in. Which is the other stock, previous stock you spoke about?
Will that be a buy or hold?
Okay, PNB Housing. Yes, PNB Housing is definitely a hold. Valuations are quite cheap. The business is strong, although there was a lot of slippages which we've seen in last 2 years. Now they have come out of all that. Valuations are cheap compared to the peers, let's say Canfin Home or Repco Home or for that matter HDFC Limited. So the PNB Housing is also a hold.
The next query coming in from Eliriza and Siddharth. She entered into Bank of Maharashtra 1000 shares at a price of 40 rupees. The stock is now down to 35 rupees. She wants to know, should she hold for previous high levels of 60 rupees plus or exit at cost?
Well, neither of them. I think don't wait for the previous high. It will come to your cost because all the PSU banking space has been moving upward. Wait out for your cost, get some marginal profits, and come out because the company is not that fabulous to get into. Looking at the entire situation of the balance sheet is concerned, although the up move is there in the PSU banking space, but I think once you come out, get into a private banking space, a quality play where you make a good returns. That is ICICI Bank.
Okay, on that note, viewers, we're going to slip into a very short break, but don't go anywhere because we're going to come back with your stock related queries. So our experts do hold on with us as well.